What is going on, investors? So this has been my most requested video to date. People want to have a look at my hyper growth portfolio, and I was planning to do this at 20,000 subscribers, so as a 20k special. However, my channel has kind of been stuck in limbo right now. We've been stuck between 16k and 17k subscribers, and this is also a video I actually really want to do. So I figured, hey, let's just do it today. All right, so you guys are getting it a bit early. So for full transparency, I have 4 different portfolios. My hyper growth portfolio is the one we're going to go through today. I also have a speculative portfolio, so that contains a lot of my penny stocks, which is deep in the red right now. So we have DSGT, BioLace, and a few other pennies that we're talking about earlier in the year. I also have my dividends portfolio, which really has been consolidated to just 3 positions right now. It's mainly MPW, so that's Medical Properties Trust, NHI, and also Stag. Okay, so Stag Industries is a monthly dividend payer, and I do have some other smaller dividend payers, but those are my main 3. And I also have a spread bet portfolio, so I do have spread bet positions up. In the UK, we're very limited with the options that we have available for leverage based investing. We have CFDs, which is contracts for differences, and we also have spread bet. Those are the main 2 in the UK, so I do spread bet as well, and I have spread bets that I've had open since 2020, 2019. So, but we speak about a lot of the stocks in my hyper growth portfolio on this channel, so we're going to look into that. So we're going to be focusing on diversification across industries, the diversification across the companies in terms of their weighting, and also we're going to look at the returns, which ones have given me the best returns. Okay, I like to use Simply Wall Street to track all of my portfolios because I do use multiple brokers, but Simply Wall Street allows me to essentially consolidate all of my positions. I just like their platform. I like their updates. They give me updates on how we performed on the week versus the general market, and also they provide me with up-to-date information with regards to the companies in my portfolio. So if there's been a new filing or news updates, Simply Wall Street will alert me to that. And I am a member of their platform. I really like their analysis and also their valuation metrics. So if you get any value, please make sure you smash the like button. With that said, let's dive into it. Here we can see my diversification across industries, and as you can see, 44% of my portfolio is within the food and beverage and tobacco industry, and that's owed mainly to my investments in Tattooed Chef and also in Celsius Holdings. Next, we have 18% in software and services, and again, that is owed purely to Palantir. You'll find in this video that I have bet big on my best ideas. And next, we have consumer durables and also apparel, so that's my investment in Gopro. The next industry is semiconductors and semiconductor equipment, and that's solely down to my investment in AMD. I'm not quite into Nvidia. I never really got to grips with Nvidia. I prefer AMD. Next is SFTW, which is Diversified Financials. However, this was the SPAC. Okay, so this was the SPAC for Black Sky, and the ticker has now changed. So Simply Wall Street, you're flopping there. They need to change the ticker symbol to BKSY. Ignore this industry right here. It should be Black Sky, which is more space, of course. And next industry that I'm in is healthcare, equipment and services, and that's purely down to my investment in HIMS. We also have retailing. Okay, so that's my investment in Asos and also my investment in Alibaba. So you can bracket that exposure into e-commerce. I'm also exposed to the consumer services industry, and that's solely down to my investment in Airbnb. And lastly, I have some exposure to real estate. I actually have a lot more exposure to real estate in my dividends portfolio, but in terms of my growth portfolio, my exposure to real estate is owed to Open Door. The new small position that I started recently is in OPAD. Ticker symbol is OPAD. All right, now let's look at the diversification by company. Tattooed Chef is my largest position. There's no secret about that. I'm very bullish on Tattooed Chef. I've done multiple videos about Tattooed Chef, so no surprises there. Tattooed Chef weighs about 23.5% of my hyper growth portfolio, and I'm happy to keep it at that weight. When the price tanked post Q2 earnings, I didn't buy the dip, and it was simply because it was already an extremely large position in my growth portfolio, and any more exposure would start to make me a little bit nervous. So I'm happy with it being 23.5%, and I'm very comfortable with that risk. So my next largest position is Celsius Holdings. That weighs about 20.8% of my portfolio, but the majority of this weight has been owed purely to the capital appreciation of my investment in Celsius. When we get to the returns part of this portfolio review, you'll see how incredible Celsius has done for us. And yeah, I'm not selling a single share. I think we're at the beginning stages of our growth trajectory. Expansion in the UK is rolling out in Q3, and I'm just going to continue to hold my position. If I do see weakness, I'm more inclined to buy even more in this company. But as of right now, I'm not buying any more right now because we are at all-time highs. So very happy with my investment in Celsius. My next largest position is Palantir, weighs about 18.5% of my hyper growth portfolio. Palantir has been consolidating for months now, so not major gains with Palantir, but I'm happy with my size in Palantir. Gopro now weighs only 1.6% of my portfolio. I have been trimming on Gopro. I made a video about 2 months ago expressing my concerns with Gopro. I did significantly reduce my position then, but the stock itself has also been on a decline, so it's not been great for my portfolio, and it currently only weighs 1.6%. Next up, we have AMD. That represents 4.9% of my portfolio, and a lot of this weight is owed to the capital appreciation once again of my investment in AMD. I did buy the dips quite heavily when it was around $75 a share, and it's appreciated since then, so I'm very happy with my allocation there. Next, we have Black Sky. So Black Sky represents 5.1% of my portfolio. They really need to change this ticker symbol, SFTW. And then we have HIMS. Okay, so HIMS weighs 7.3% of my portfolio right now. I do want to buy more HIMS. Okay, I do want to buy more HIMS. I would like to get this to about 10%. We did see some weakness, and I did buy some more HIMS recently. But yeah, it still currently weighs 7.3%. Then we have Asos. Okay, Asos has just been absolutely going like this, and it weighs only 1.8%. It did weigh more, but I bought into Asos about £39. I think it's currently now at 32 or 33 pounds. So a lot of depreciation has occurred with Asos, but I do plan to buy the dip on Asos because I think it's just investor pessimism. Then we have Alibaba. Oh boy, Alibaba, that weighs about 6.8% of my portfolio. My average cost in Alibaba is about $191. This has not been a great hold, as you can imagine. There's still a lot of investor fear and pessimism, and that's not been helped by the leadership of the country, where they're cracking down on tech. So yeah, not a great position for me, and you'll see in the returns I'm down quite significantly. Then we have Airbnb. Airbnb weighs about 6.1% of my portfolio. I am not done buying Airbnb. I still want to put a lot more money into Airbnb, but as of right now, it still weighs about 6.1%. Then we have Open Door. Open Door, I am nowhere near done buying. It weighs about 3.1% of my portfolio. I'd love to get it to about 5%. So I welcome any weakness in Open Door stock right now, and I will be loading the boat. And there we have a small position in OPAD. Only 0.5% of my portfolio. It's a startup position. If you're in my Discord, you know why I haven't bought any more just yet. Now, moving on to the juicy part, we're looking at the contributors in terms of returns. Now, all of the stocks that you can see here are all new positions that I started this year, apart from Tattooed Chefs. Tattooed Chef is the only position that I have that is over a year old. I started investing in Tattooed Chef when it was still a SPAC, and so far it's returned 7.51%. That's about £3,500 so far in terms of gains. Not great, but still better than I would get in the bank. The company has been doing extremely well, in my opinion, but the stock hasn't. The stock has been consolidating. Hey, but it is what it is. So next we have Palantir. And Palantir, I've been holding this for a good couple of months now. It's returned 12.73% for me, and that's a gain of £4,499. Not much I can say about Palantir apart from I think the stock will continue to consolidate while the valuations catch up to the fundamentals, or the fundamentals catches up to valuations, whichever one. I think it's highly probable that Palantir will continue to consolidate. So my current gain on Gopro right now is only £114. Now my biggest gainer by a mile is Celsius Holdings. Okay, I've returned 67% since holding Celsius, and my average would have been a lot juicier, but I did average up in Celsius, so I would have been up over 100% in my position in Celsius. But I did take advantage when the share price dropped to $62 due to the public offering from the company, and I averaged up from about $45 to about $54, and that affected my average, which of course affected my returns. But I made a lot more money on the way up because I had a lot more shares working for me, and that's currently giving me a gain of £18,000. Very happy with Celsius. And again, I don't plan to sell this. I plan to hold this for the next 5 to 10 years because the growth has only just begun, in my opinion. Now, moving on to my second largest gainer, and that's AMD. I'm up 35% in AMD, and that's giving me a gain of £2,776. So very happy with AMD. This is a position I plan to hold. I don't plan to add any more, just because the semiconductor industry is not an industry that I have a vast amount of knowledge on. I have basic knowledge of the industry at best, so I don't really feel comfortable adding too much money into an industry that is not necessarily within my circle of confidence. I'm down on Black Sky by 13%. I'm down minus 13.84%, and that's a loss of £1,780. I'm also down on HIMS minus 5%, and I'm down £833. I'm also down quite heavily on Asos. I'm down 17% right now, which again equates to a loss of £824. My biggest loss is in Baba. I'm down 11.76% in Baba, and that's currently minus £1,941. But I am up on Airbnb. I'm up 9.81%, and that's a gain of £1,172. I'm up on my position in Open Door by 4.57%, and that's a gain of £295. And I'm down in my position in OPAD, minus 8.95%, and that's currently a loss of £102. So as you can see, my hyper growth portfolio has been doing quite well on the year, and that's mainly due to AMD and also Celsius. They have been my biggest gainers. Then we also have some decent gains in Palantir and also some good returns in Tattooed Chef. These three companies have pretty much carried the laggards in my portfolio in terms of Black Sky and also in Alibaba. I'm very confident with HIMS, and I plan to continue to average down in HIMS. But yeah, that is my hyper growth portfolio. So if you did gain any value from this video, please make sure you smash the like button. If you're new to the channel, hit that subscribe button and the notification bell to stay up to date with all of my latest videos. So that said, thank you so much for watching, and I'll catch you in the next one. Peace.